The outlook for the Texas economy for next year is slightly better than the growth that we saw this year. Toward the end of the year, the energy sector stabilized as well as the manufacturing sector, and that's good news for the Texas economy, which saw a lot of weakness in the first half of this year. So heading into next year, things look a little better than this year. The recent decision by OPEC to cut production has led to increased optimism about oil prices for next year. Producers in Texas, as well as throughout the U.S., are always guarded in their optimism, and they want to make sure that these cuts actually occur. But I think it's led to the view that oil prices are more likely to increase next year than to decrease. So the manufacturing sector has shown improvement in the second half of the year, primarily due to the stabilization of the energy sector. But going forward, we're going to expect continued headwinds from the strength in the dollar. The dollar has put a lot of pressure on Texas manufacturers because as the dollar gets stronger, goods produced here in Texas become more expensive internationally. So while we're getting some relief from demand from the energy sector, we still are facing a lot of pressures from strength in the dollar. Our Texas Business Outlook surveys that we do at the Dallas Fed reveal increased wage pressures in recent months. And I think that's due to the fact that employers are having difficulty finding workers, particularly in those areas that have been growing strongly, such as Dallas and Austin. And these increased pressures on wages are certainly good for workers. But if they're not met with productivity increases, in the long run, they can cause increased price pressures.